Thank you, and welcome to the 4 easy rules of a living benefit account. The living benefit account is a process by which an individual reduces or eliminates the need to rely on a traditional bank as their main source of financing in their lifetime. Most people never realize that they have been conditioned to think banks are the go-to source for capital. This is because we are taught at a very young age that if you need money, aka a loan, you go to a bank. For the majority of households, many of life's big capital expenditures, like a house, business, equipment, or college tuition, is bank financed because they have never learned about the living benefit account and how to be your own banker. As a result, the average person will park money in 401k/IRA plans, where they can't touch it without penalty until age 59 and a half, or in their house in the form of equity that is illiquid and earns no rate of return. Their money is essentially in a lockbox they don't control. But there is a better way, and it's through the living benefit account. At Liquid Equity Partners, we walk you through the process to show you how you can benefit by reducing or eliminating the bank as the middleman between you and your money. With a living benefit account, you'll have a financial system that will serve as your warehouse of wealth, and you'll profit from your controlling your own money instead of allowing your bank to profit from you. Your account will allow you to finally have the liquidity, flexibility, control, and efficiency over your money that no other financial system or strategy can match. We do this by customizing a properly designed dividend-paying whole life insurance policy, the complete opposite way the average person would buy a permanent life insurance policy. Set up properly, you have a financial system that will help you build wealth without taking any unnecessary risk, while at the same time putting you in the driver's seat to control your financial well-being. The rules to becoming your own banker with a living benefit account happens to be very straightforward and easy to follow. Rule number 1, think long-term. In order to build wealth safely, you need to have a plan that has a reliable track record and flexibility to handle life's inevitable curveballs, like divorce, medical expenses, or unexpected business expenses. The living benefit account allows you the best of short and long-term planning because it allows you access to your money when you need it. Even after just 30 days of initial funding, whether you are single, recently married, a business owner, or nearing retirement, there is always a need to park money where it is safe from the fluctuation of the stock market, taxes, and where it is earning more than 1% annually. With a track record of over 150 years, which predates the IRS tax codes, living benefit accounts not only make sense from a safety and stability standpoint, but there are tax benefits that can reduce and/or eliminate your tax burden during your lifetime and after. Depending on your personal situation, an account can be designed for you that utilizes either pre-tax and post-tax dollars, allowing you to maximize your wealth building over your entire lifetime, while also creating an instant legacy for your beneficiaries, should you pass away prematurely. This is an account that can assure your financial goals will be realized, even if you are not around to see it. No other financial system can offer as many benefits as a living benefit account in one place. So don't be afraid to think long-term. Rule number 2, don't be afraid to capitalize. Once the account is customized to fit your budget and lifestyle, the goal is to maximize every dollar you can fund into the account. You will also have access to the money at any time, tax-free, and possibly tax-deductible when you access the money through line of credit. Every dollar saved will create future opportunities for you to use the line of credit from the account for any purpose you can think of: investing, business loans, real estate, college tuition, etc. So the more you save, the more opportunities you'll have to use via the line of credit. Plus, the money will continue to earn interest and dividends on the full dollar amount as if you never touched the money. So rule number 2, don't be afraid to capitalize. Rule number 3, don't steal from yourself. As you develop a pool of money within your living benefit account, be accountable for the usage from your line of credit. Never borrow from your account without the intention of paying back the line of credit while you are in your working years. Whether you repay the line of credit in 2 months or 10 years or longer is entirely up to you. Although you do have the flexibility to determine your own repayment schedule, Keep in mind, if you use your line of credit without the intention to repay it, your actions are no different than taking a loan from a family member and never paying them back. The difference here is you would be stealing from yourself instead of your family. Your account will earn interest and dividends uninterrupted, regardless of whether you use the money elsewhere. But you will want to have the discipline to recapitalize your policy. The faster you can repay your line of credit, the more liquidity you'll create to reuse that money for additional purposes. So rule number 3, don't steal from yourself. Rule number 4, stop using traditional banks. Once you have capitalized your account to the point you can begin financing big capital expenditures on your own, there is no need to continue to outsource your banking needs to a traditional bank. You are in the driver's seat and in total control of your financial future. No more bank loan applications, credit checks, verification of assets or employments to get approval. You can never be turned down for a loan with your living benefit account. The only thing you need to do is start using your living benefit account to be your own banker. In doing so, you'll maximize your wealth building efforts without any of the luck, skill, or guesswork required with any of the other traditional Wall Street and traditional bank financial plans. That forces you to outsource your savings and financing to them. So, rule number 4, stop using traditional banks and profit from your own need to finance your life. In conclusion, every dollar saved will create future opportunities for you to use in the line of credit from your living benefit account for any purpose you can think of. College tuition, investing, business expenses, medical expenses, purchase equipment, to accelerate the payoff of debt, even start a new business, etc. Start becoming your own banker with the living benefit account and reduce or eliminate the need to rely on a traditional bank as your main source of financing. Can you see how a living benefit account would enhance your lifestyle, your children's lifestyle, and possibly your great-grandchildren's? Insurance claims of product safety or guarantees are subject to the claims-paying ability of the issuing preferred insurance companies offered by Liquid Equity Partners, LLC. Liquid Equity Partners, LLC, and their agents and representatives do not give tax or legal advice. Account must be valid and meet all terms of the insurance companies. This information is general in nature and not comprehensive. The applicable laws change frequently, and the strategies suggested may not be suitable for everyone.